What's good, YouTube? My name is Nate Rodriguez, and in today's video, what I'm going to be talking about to you guys and pretty much explaining to you guys is market structure. I'm going to be telling you guys what market structure is. I'm going to be telling you guys how market structure moves, and I'm also going to be explaining to you guys why market structure is so important. So without further ado, let's get right into it, and I'm going to explain to you guys what is market structure. So market structure is how the market moves, okay? It's the most important thing that you could learn. I personally rather put it over any strategy. I don't look at any strategies. I don't look at any indicators. I don't look at anything like that. When I look at my charts, whether you're trading futures, whether you're trading Forex, whether you're trading stocks, you want to understand the overall structure of the market. That is how you're able to read the market. No matter what, the market is actually made up of human psychology. So certain points in the market are certain points where people believe are high, certain points where people believe are low. But what that creates, that psychology, those buys and sells, what that creates is pretty much trends, which we call market structure. And let me just give you an example of what that may look like. So this would be a trend, if I could draw it out for you guys. This would be a trend, and this would actually be a bullish trend. So this means that people would want to buy on a trend like this. You would want to buy at the lows, you would want to sell at the highs. Buy at the lows, you would want to sell at the highs. Now there's an opposite to this, and that would be a bearish trend. So that would be like this. And you would want to sell at the highs, buy at the lows, sell at the highs, buy at the lows. But you would never want to just buy or sell at the highs, just by itself, just based off that. But we'll go into that in further detail in another video where I explain to you guys why you would buy at certain highs and certain lows. Now, pretty much what this is, though, what I'm explaining to you guys, trends are made up by what? They're made up by structure. So what structure is, like I said earlier, is the way that the market moves. Now, the market moves in 3 different phases, and these are very important because when you're trading the trends and you want to be able to predict, because that is how we make money, we're able to understand what's coming next. We're able to understand the patterns that are happening in front of our eyes. So you want to be able to predict what's going to happen next. You want to be able to understand how the market moves. So the market moves in impulses. So that would be your shoot up, a correction, which is a pullback, and a continuation. As you can see right here, I don't know if you can see that, but we would do an impulse up starting from down here. Then at the top, we would create a correction, which would follow down ultimately into this area here. And then we would have a continuation, which is this upwards leg at the top right here that you can see, hopefully. But what this is this is how the market moves. This continues. This is how a trend is formed. It will impulse up, it will correct, and it will continue. It will impulse up, it will correct, and it will continue. And ultimately, it will do this until there's a break of structure. So now, what is a break of structure? You might wonder, what is a break of structure? So a break of structure is when price is moving in a trend. So say like we had our first trend, the uptrend. Price is moving in that trend, and then ultimately that trend breaks. Okay? Now, that might sound very obvious. But sometimes there are things called fake outs, which wouldn't necessarily be an actual break of structure. So say right here, for example, that we have a trend going up, right? We have an impulse, correction, continuation, impulse, correction, continuation. As you can see, we have this trend going up, right? Now a break of structure would be when this low, which is right here, the previous low, when that low is broken. But not just broken, it must also be retested. And then that right there, that retest will confirm that this isn't a fake out and price is actually going to continue down lower. Now, a lot of times there are situations where price may do something like this. Now, this will be a fake out. So price may be in its uptrend, impulse, correction, continuation, in its uptrend, and price might come down here, come a little bit lower than the previous low, as you can see, but then ultimately shoot up with something like that. So if you would have just sold just because it came here maybe a little bit lower, you would have got faked out, you would have got your head knocked off. You don't want that to happen to you. You want to always have confirmation. So the way that we signify confirmation is when we have that break and that retest. So impulse, correction, continuation, impulse, correction. Well, impulse, correction, continuation, because you're not going to get the impulse to the opposite direction until there's a break of structure. So we have that impulse to the opposite direction. We break the previous low. We come back to correct, and then we have a continuation in the opposite direction. That right there will be signified as a break of structure. So now, what you should understand is pretty much what market structure is, why it's important, and this also, how does market structure move? And then finally, now you understand what a breakup structure is. Now that can also happen in the opposite way. So a trend could be going down, impulse, correction, continuation, as you can see. And there could be a reversal. And in another video, I'll teach you guys how to understand when a reversal is coming and how to take advantage of that. But pretty much, this will be a trend going down, and you could draw your little trend line through here or whatever. And you would know that this is changing direction, that price is going to go into a different direction once this impulse comes up and breaks the previous high. Same thing like with the lows. So when we were looking at the lows, it was once the low was broken and retested, boom, then we knew that price was going to go in the opposite direction. Same thing applies here. Once this previous high is broken and it gets retested right here, we're expecting a continuation up to the top, and then we can expect a correction, a continuation, a correction, and a continuation. Ultimately, until we get to our next breaking structure into the opposite direction. Now, finally, the last thing I want to explain to you guys, and I know I might be talking a little bit fast, but this is the first video, and over time the videos are going to get better. But listen, ultimately, all structures are made up of other structures. And I'm not going to get too in detail with this, but I'm going to pretty much give you guys something that you can, work with, something you guys can understand. So pretty much, this thing is called the 4 hour. This thing's called the 1 hour. This thing's called the 30 minute. This thing's called the 15 minute. And if you look on each of those charts, which these charts are made up in candlesticks. This is lines that I'm drawing right now. I'm not going to sit here and draw a bunch of candlesticks and make that. It just ain't going to happen. But listen, pretty much what happens is a 1 hour structure. So say this is a 1 hour structure. Impulse, correction, continuation. You see that right there? A 1 hour structure. That will be made up by 30-minute structure. So the 30-minute structure might be inside of that structure like this. And you will be able to see different trends inside of the original trend. So pretty much the minor structures make up the major structures, and the major structures make up the structures that are even bigger than those major structures. So to ultimately understand structure, you want to be able to, understand structures on all different time frames. And what that's going to do is once you understand the structures, you're going to be able to understand the directions. Because if you're on the minor time frame and you're seeing that minor structures are being broken, you're understanding that those structures are creating the major structures. So if the minor structures are being broken continuously and they're going in a different direction than what the overall trend is, then you can understand, okay, maybe a major structure trend is going to be broken. A reversal might be happening soon. So you definitely want to pay attention to things like that. There's a whole bunch of other things that we could throw into this. There's also a tool called Fibonacci, which applies perfectly with this, which is actually something that will really help make this make a lot more sense, but I can make that in a separate video. This video is already kind of long. I don't want to go too long. I want you guys to be able to get the information as simple as possible and digest it. I don't want to talk too long. I know you guys' attention span isn't like that, so I want to just make it quick, short, simple. But in the next video, I'll be explaining to you guys what Fibonacci is, how Fibonacci works, and how you can apply that to structure to ultimately understand where price is going to go and where price is going to reverse from. So I hope you guys like this video. I hope you guys got a lot of value and a lot of knowledge from this video. And I hope that, you guys subscribe, like this video, show some love to this video, and then show up at the next video so I can teach you guys some more and I help you ultimately understand more how the market moves. And if you have any other suggestions, if you have any other questions that you want to ask, just ask them below in the comment section. And I'll be more than happy to help you guys with those questions and give you guys the answer that you guys need. It's your boy, Nate Rodriguez. I'm out. I'm going to catch y'all in the next one.